Joining me now, Mahoney Asset Management CEO Ken Mahoney. Also joining the conversation all morning long, Professor of Business and Economics at the King's College in Manhattan, Fox News contributor Brian Brenberg, and Forbes Media Chairman, former Republican presidential candidate Steve Forbes. Welcome one and all. Ken, to you first. Do you see this as the direction for the economy, but have the markets already factored in that kind of growth for the U.S.?
I think so. Look, one of the biggest things we've seen so far this year under the surface is that a large cap into mid cap to small cap. I mean, QQQ, the NASDAQ 100, which was a great place to be during the pandemic, it's up 10 cents for the year, okay? And you're starting to see some mid cap and small cap, which is more domestic versus multinational. So I think the market's been starting prices in late December, now early January. That big is not necessarily better. In fact, money's going into more domestic type of companies, expecting this, 6.5%, Goldman Sachs said, 6.5% GDP, which is pretty extraordinary amount of growth considering where we were.
Steve Forbes, jump in here.
I'm wondering your views on what the spate of regulations that the Biden administration are going to be spewing forth, what that'll do to the real growth of the economy, especially new business formations and the like. The markets really factored that in, that they've certainly slowed things down during the President Obama administration. Are we going to be in for a repeat of that?
Steve, look, there's a lot of spewing, that's for sure. We'll see a lot of that. I think that we have to break the market, though, in two acts. Here's the first act, so to speak, which is pretty generous. $2 trillion. The Fed, buying assets, Fed fund rates at zero. So I think that's kind of first act, almost like the honeymoon. And Steve, to your point, down the road, I'm not sure the market really has factored it in. And that's the second act, which will be more regulation, higher income taxes, personal taxes, capital gains taxes, corporate taxes, and the like. So I think that's where we have to kind of divide it. At the moment, the market's kind of looking at the first act because you see the 50-day moving average, the 200-day moving average, the major leading averages. All of them are going higher at the moment, Steve. So you're right, there will be a sea change. But at the moment, I think the market's just flooded with liquidity, and that's overriding some of the concerns, which I'm sure we're going to have to deal with all the regulations.
Brian?
Yeah, Ken, talk about energy for a second. I'm reading this morning that the Biden administration is considering revoking the permit for the Keystone XL pipeline. We've heard talk about higher gas taxes. We know that energy regulation is coming. To me, that's like hitting right at the backbone of the U.S. economy, which would be a growth killer. Do you see some of those policies sneaking up on investors later this year and dampening some of the enthusiasm we see right now?
Yeah, right. Look, it's amazing that the President Trump, that is, some years ago said we're going to be energy independent. And it was almost like, okay, come on, really, this is not really going to happen. It's happened. Really, to undo that, you're right. That is the backbone. I mean, we rely on that. Here, we've seen a lift in oil prices, and just like Steve said, more regulation. So I think right now we're looking at it and say, well, the market is not really factoring those things in. I think it is going to factor those in, but right now we're just sitting with so much liquidity and driving up all the EV stocks and all the momentum that we've seen. But right, part of the issue is going to be all this regulation, undoing all the stuff that Trump did to help break up the regulation and get companies to start growing again. It's definitely going to be a headwind, Brian, for sure.
Yeah, there's already a bill that's been proposed, and this was last year, even before the presidential election, that mandates that you get rid of cars with an internal combustion engine. It mandates all electric vehicles in literally 15 years. Before you go, Ken, earnings season is underway. This week we'll hear from banks, including Bank of America and Goldman Sachs, as well as technology stocks like Netflix. What are you expecting in terms of big winners potentially this week?
So I don't know about the banks. We saw J.P. Morgan have decent numbers, and they sold off because they've been on a tear for the last couple of months. Since the vaccination rollout, we've seen a lot of money come out of technology into other sectors, including banks. But you know what it's going to be about, Dagan, this time around? I think it's going to be about visibility. Last year we gave these companies a pass because with the pandemic, we didn't know what to think, and they were able to say, well, we don't have visibility. But I think this time around, though, they're going to have to give visibility what they're going to think that's going to happen in 2021. So, yeah, again, fourth quarter's in a rear view, so to speak. I want to hear what they have to say about guidance. So I think guidance can be the key to all these companies this week and throughout their earnings season.
Ken, great to see you. Have a great week. We'll see you very soon. Ken Mahoney joining us. We're just getting started.